Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of NFT Perp. The reason why I want to do this podcast is because there's just not enough people talking about NFT financializations. In this podcast, you can expect us to invite guests that are builders, founders, even investors that are deep in the NFT financialization space. We'll discuss their story, what they're building, and how you can get involved. So thanks for tuning in. Welcome to the 14th episode of Look at My JPEG podcast. This week, our guest was Ben from Spicyest. Spicyest is a market maker and liquidity provider, specifically for NFTs. They're focused on accurate pricing, live data, and analytics. Spicyest aims to make a name for themselves within the NFT finance space. I hope you enjoyed the episode. Well, thanks for coming on. This is the 14th episode of Look at My JPEG, and we've been wanting to get you on for a while. There's been a lot of misscheduling on my side and also a little bit on yours, so apologies, but super excited about what we're going to chat because I don't think there's a ton of other companies that are doing what you guys are doing in the space, and I'm pretty curious about what goes on behind the curtains at Spicyest. But before we hop in there, why don't you give everyone a intro of yourself? How did you get into crypto? And then we can get into Spicyest.
Yeah, I'll start. I'll just start about my journey into crypto, I guess, and then talk about the company a little bit. I got introduced to NFTs through my friend, who's now my boss and co-founder of Spicyest, David. He was just really into trading overall, and then during the latest bull run of late 2019, he really got into NFTs, and he just told me about a bunch of NFTs that I should buy. At what point, I think Chain Runners was like the main one that I really got into, and then the rest is history. Yeah, I got into the bull run, and then still staying in during the bear run, during the winter, and all that. The company itself, we introduced ourselves as NFT market makers and liquidity providers. So we started off by creating a web app that's free to use, still up, by the way, where you could just check the price of your NFTs or any NFT that's on Ethereum, and a couple on Solana, actually. And based off of that sort of Oracle, understanding that we think we have a good understanding of what the NFTs are worth, we trade. So we buy and sell a bunch of NFTs, and that's what market making is to an extent. We provide liquidity on the buy side. We also provide liquidity on the sell side by buying and selling or bidding a lot of NFTs. That's the short explanation of what our team does. So currently we're a team of a lot of software engineers and traders who are invested in sort of trading NFTs in the long term.
Got it. No, thank you for taking the step back and give us a quick intro of the company started, where you guys are. Curious to know, when you guys started with the idea of appraising, would that be a good word to describe it, appraising NFTs, individual NFTs? And did that lead to some sort of discovery so that you guys saw an opportunity to perhaps buy undervalued specific items and sell them at a spread? How did that come about?
Yeah, it's not necessarily that we got into praising and discovered that this is something we could trade. I think internally as a team, we knew we always wanted to become market makers and liquidity providers in the space. I think tackling on the pricing problem would get our sort of name out the door initially, and I think it did. I think pricing was still. To a lot of people, pricing is still an unresolved issue. I think a lot of teams just create a pricing solution internally. But yeah, we knew that. First it would help us get a really good understanding of how to trade things. Because if you want to trade something, you should really have a good understanding of what the worth or how to value the asset. which solved that. And two is, sort of getting our name out the door in the saturated NFT fi space. I think that led to a lot of connections, such as you guys, and a bunch of other teams that are in the NFT fi space. And so that's how we decided to start off with the pricing oracle. But in the background, we're like actively looking to NFTs and buying and selling them. And I think we just got more comfortable with it, I guess.
For those that are listening, can you give them an example of like what's wrong with current pricings in terms of data across the NFT space, whether it is floor or individual appraised NFTs values? Like, what are the issues and how do you guys solve them?
I'd say we see, I think floor pricing is done very well across a lot of other teams. I don't think we see a ton of focus, or I think eventually people are gonna also work on pricing non-floors. So, for example, we're generally bullish on like NFT futures. I think it's a great way for people to hedge their position if they're like thinking of going into a particular collection and want a somewhat of a less risky position. But it's hard to necessarily do that if you're thinking about buying a rare ape or like a non-floor penguin, for example. And it's simply because there's not a bunch of partially not a bunch of interest, but perhaps not a lot of data either. I think you see a lot more transactions on floor price NFTs as opposed to non-floor price NFTs. But if like a trading becomes, if we want more trading to be done, like the token or a more traditional stock, I think you would want to see more solutions towards the non-floor NFTs or more pricing solutions towards non-floors. And that's what we're also focused on. And if you want to check out your non-floor price, you can do that on Spicyest.com as well. Just a small plug.
So, if I understand correctly, are you guys, with regards to the rare NFTs pricings, are you talking about individual token ID appraisal, or are you talking about like, let's say, all the apes with golden fur sort of pricing, like a trade floor for rare NFT collections? Is that what you mean?
Yeah, both. But to answer your question, yeah, like individual tokens, NFTs. I think our solution is that we sort of break the price based on traits. So that sort of tackles, it can tackle, as in it could appraise an individual NFT individually, while at the same time being aware that, oh, like the reason why this ape is priced higher than floors is because it has, the golden hat, which a lot of people, the data indicates that the golden hat is one of the reasons why this might be slightly priced higher than the floor, because we do break the price down by traits. That's one solution where I think people can deploy if they want to like price the non-floors or more individual NFTs.
Yeah, I think this is an interesting conversation for me to kind of like facilitate. I would wonder if rarity and value always equate to one another, meaning like because there are some NFTs out there within an NFT collection that is rare, but it doesn't aesthetically look good. But there are some NFTs out there that are perhaps super clean. It's not necessarily the rarest, but it has higher desirability compared to other NFTs within that collection. How does that fit into your pricing models?
Yeah. So one example of that is like we actually did like a analysis on like chain runners overall too, and identifying specifically traits that are not necessarily rare, but the community indexes it as like a positive trait, and therefore that NFTs with that particular trait trades higher. So with chain runners specifically, there's this thing called the blip map I think it was like a collab. It was a sign of a collaboration of chain runners with a different development team, and so a bunch of these hats. It was considered common. There was a bunch of them, but people liked buying and selling chain runners with that particular hat because the community associated it as like a positive thing. Um, like, yeah, you won't necessarily see that unless like you have a good understanding of what things are priced and what things are being sold and bought at. Um, I think it's also just important to have like an open mind when it comes to identifying those particular traits. That it's not always necessarily like the rare one that always prices well. It could also be common traits that you might not necessarily identify until either you, yes, speak to the community directly, asking them, hey, like, what are some of the uh, NFTs in your community that trades often or trades higher? Or you just identify, yeah, like query the NFTs by different traits and identify, oh, like not associate like different traits with different price points, and go from there. So yeah, if you wanted to sort of understand the nuances, either you query that particular NFT collection a bunch of times, or yeah, speak to community directly. Go jump into Discord and just simply ask. I think they're always looking for newcomers to join their group.
Yeah, that's interesting. I'm very interested to know, like you probably don't have the answer to this, but I'm definitely excited to see how these rare NFTs and non-floor NFTs could translate to. It has really translated in lending and borrowing because it's a very simple concept. It's easy to price. You only need two people or two counterparties to agree on a valuation for that specific transaction
Yeah.
to work. But to create markets out of these, you almost have to have a consensus across traders, protocols, to say we agree on these valuation and there's demand for this. Let's create markets around these, around derivatives. Maybe I think cash settled might be pretty tough because these things are heavily reliant on Oracle, and the base assets that are generating these values, sample size are extremely small. So for a market to be efficient, it's quite difficult. But maybe over time, that could improve. I don't know what that would look like. I think stuff like putty finance, which is like a P2P exotic options, cover puts and calls, could be done relatively easily since the counterparties are limited. Yeah, which is you guys have partnered quite early on. I think that's the first time I came across Spicyest, logo and text was actually using Putty's front end, and I came across you guys. Can you talk about that partnership a little bit?
Yeah. So basically, Putty is one of the teams that, just like any, I think you touched on this great. You explained it very well. Basically, they need a pricing solution because for a team like Putty or any team that's like building an NFT product, they need to have a really good understanding of what the price or what the value of this asset is. Like the example you gave, if someone were to trade an NFT or buy or lend out an NFT, both parties, the one lending it out and the one giving out the loan, needs to agree on the price, right? And if you can't agree on the price, nothing will happen, and then liquidity goes down overall. So one solution to overall bring more liquidity into the space, but also have for more people to just buy and sell NFTs or loan and loan out NFTs, they would happily rely on a good oracle that provides prices that both parties can agree on very fast. I think Putty was also one of the teams that were looking into a pricing solution. And thankfully, they chose us out of all the NFT pricing solutions that are out there. I think they still do. Yeah. Oh, sorry. What was the question again? Like, what's the relationship with, like, how did that partnership came about?
Oh no, I just want to to double click on it and expand upon what you guys are doing. So I thought
Yeah.
it was kind of cool to see how teams work together.
Yeah. So yeah, for them as a team that are creating buy and put options on NFTs, they're in inherently also, in one sense, providing a loan or loan in the long term future when they're buying and selling NFTs. So they also need someone who could price the NFTs well, and that's how they use us.
Awesome. Well, thanks for covering like the data side and pricing and analytics part of your company. Give us a little breakdown about like perhaps all the major pillars of things you guys do at Spicyest. I think data analytics is a big part of it. Tell us a little bit about market making. Which markets do you guys typically marketplaces do you guys trade on? Any favorite ones? What are your thoughts on the sort of the evolution of royalties going down, sort of going away, coming back, with the recent, Blur, it's a bit of a run that they have. Yeah, any preferences in terms of marketplaces you guys like for you guys, for market makers? What are you seeing?
We trade across all major marketplaces. Obviously, OpenSea is still a big player. As much as we would like to try to trade on other marketplaces, I think a lot of liquidity is still focused on OpenSea. That being said, I think Blur is also a legit competitor. I think their promise of airdrops to those who buy and sell and bid a lot of transactions on their platform is definitely an enticing tool for professional and non-professional traders in the platform. And we do see a lot of volume happening there as well. I personally was skeptical, but based on like the trading activity we see, I think they're doing a great job of trying to bring on more traders onto the platform. And you were asking about royalties, right?
Yes.
Um, uh, I mean, in the perspective of a trader, royalties does hurt. It's as a trader, it feels like a necessary evil because we do understand that royalties do help long term for the collection to create new content. It is a form of revenue for them, so for them to like stay afloat and constantly generate noise and interest for their NFT collection is good for us because that means we have an asset that we could buy and sell. But at the same time, obviously, it cuts into like the margin that we make based on the trades that we make. I think overall, it's like I think a dynamic solution to royalties to help because I think there is like a good sweet spot of like of royalties being worth the percent that we pay off if the volume is really high, right?
Mm.
And vice versa, if the volume is very low on this particular collection, obviously the royalties hurt more because it's just like more of a burden or a risk that we take if we were to buy and sell this NFT because we know the margins are going to be a lot thinner. So I think it would be cool to see a solution where like royalties change depending on how much volume or how much liquidity there is for that particular collection or that even for that particular NFT perhaps. But that being said, I think overall it's like it will change. It will go up at some points, it'll go down at some points, depending on like how people perceive royalties and how much volume there's in the overall market. I think it's not coincidence that like people were thinking about like having that conversation like royalty should go to zero or like should go down significantly during the winter or like I guess it is a winter during the bear market. But yeah, that's our take. It's not like a ramble, but that's our take on royalties. I think.
Yeah, I mean, it's an interesting topic, right? Like, I was talking with Jason, the head of research at Reservoir, and prior to the Blur launch, they were going to sort of like solve the issue of NFT market making inefficiency because of the fact that they have platform fees and royalties being charged in both ways. For a market maker is pretty tough. The fees alone is quite steep, right? And
Yeah.
they basically build this contract that allow you to have a NFT market making and liquidity sits within a contract, so it doesn't, technically affect the royalties. So for market makers, his take, like their stand on royalties for traders, for market makers, is that they don't necessarily have they don't exercise the utility or perks of having that said NFT. Like when we think about NFTs collections, as a holder, you are attributing sales back to the creator because you get the benefits of being a part of the community. You have access to exclusive events, token gated access to Discord channels. And all the benefits that comes with having an NFT that has utility on it. So their take was that makes sense for collectors and holders to attribute value back to the creator because they're sort of getting positive, net positive out of the ecosystem and out of the community. So giving back to creator makes a lot of sense.
Yeah.
For market makers, that's actually providing liquidity so that community members can easily enter or exit this, token economics. They are the ones not necessarily exercising any of the benefits that they could get from holding these NFTs, and therefore they shouldn't pay royalties. So there are some different debates out there, specifically for
Absolutely.
market makers.
Mhm.
And I think when SudoSwap came out, that also sparked a lot of conversation around what does it really mean for LPs to attribute fees back to creators? So yeah, I don't think we have an answer, and it's probably something that we can't cover in a short couple of minutes in a podcast. But I think it's
Right.
something that I'd like everyone to think about, and it's an interesting thing that it's been around for a long time. It might stay, it might not, it might go
Mhm.
away. But it looks like from Blur, they've introduced it back to a smaller percentage
Yeah.
for the collectors.
Right. I think it'll also be interesting to see how collections overall react to it, because I think they at least the ones that are well, I guess even most collections, I think they're aware that royalties aren't necessarily here. There's a possibility of that not necessarily being there all the time, so they're like pursuing different revenue streams. And I think they're being smart about it too, understanding that like when you're launching an NFT collection these days, you can't just completely rely on royalty fees for them to stay afloat. So
Right.
it'll be interesting to see how like the meta shifts in the next upcoming months. Yeah.
Yeah, really interesting. Um, so another question that I have around NFT market making, typically speaking, we think of market making in the traditional sense of fungible tokens or maybe in traditional equity and stocks. Like it's very common for market making to focus on strategy around the highest bids and lowest asks. Like since token are fungible, one Bitcoin equals to another Bitcoin. Therefore, liquidity is really concentrated around where the book is. And I think with NFTs is dramatically different because of different rarities, because of different tiers within NFT collections. So, what does that look like for you guys? Like, how do you and if you don't want to, you don't have to share because it's probably some proprietary information. But like, let's say you're providing liquidity for a NFT collection and your total budget for it is 100K. Like, where do you spread your liquidity? Do you mostly focus on floor? Do you have it trunched out across different tiers? What does it look like? Give us a little peek behind the curtains.
Um, I'd say it's I can only I guess it's not we don't completely focus on floor. So if you have an X amount of budget, I think uh basically as market makers we want to encourage as much price discovery as possible across different NFTs, not just the floor. I think the assumption is that floor is the one that will naturally see more liquidity than the non-floor ones. And being aware of that, we would want to sort of engage not just on the floor, if that kind of makes sense.
Yeah.
Because our sort of mission and our hope is that if we were to market make a particular collection, we would want to see natural volume across all NFTs, right, with a particular collection.
Mm-hmm.
And so if and to achieve that, we would engage with the non-floor as well, simply because yeah, you want more people to be buying floors and non-floors when they were to like enter into an NFT collection, right? And in
Yeah.
order for to do that, we would try to engage across not just floors but also non-floors as well.
Would you say non-floors are more volatile or like around floors more volatile?
Um, I think it really depends.
Mm.
Because we've seen floors become more volatile at some points when there's a lot of volume. I think generally when there's a lot of volume, it does become less volatile.
Mm.
But as you know, in the expert of like floor NFTs, like those can be uh like manipulated to an extent if there's enough volume. I think, and I think the same logic applies for non-floors as well. Because there's a lot of volume, I think generally it's expected to be more volatile. But I mean, at times, if you're the one that's bidding or buying these non-floors, I think you could also dictate what the price is for those particular assets, which may lead to it being less volatile.
Yeah.
But traditionally, yeah, I think it's true that like more floor, less volatility, and vice versa. But I'd say for us, it's like definitely a case by case basis.
Interesting. Got it. With regards to marketplaces, do you guys prefer a decentralized market making, perhaps like on protocols like pseudo?
Mm.
Is there any protocols that you're excited about that's more on the DeFi side of things? I think most marketplaces that people trade on, the one with the most volume, is still more or less on a centralized order book model.
Right.
Are you excited about decentralized marketplaces for NFTs for these sort of different liquidity pools sort of matters? I think like we've seen so far, we got SudoSwap, we have NFTX, the OG of NFT AMMs, which fractionalize tokens. And we have Caviar that's coming out. I think Collection.xyz is another one that's coming out. Like, there's a lot of
Yep.
these decentralized finance NFT marketplaces coming out. A lot of them are trying to address the problem of price discovery for perhaps non-floor NFTs. Because if you think about what we've spoken on so far, a lot of the volume does come from non-floors, but most of the NFT marketplaces that are DeFi don't particularly focus on that at the moment. I think Caviar is one of the protocol that's looking to solve this issue.
Yep.
What are you excited about?
I think Caviar is definitely one to look out for. I talked to their team, know the team personally. I think they're definitely on the right track in terms of like providing a more decentralized solution. I think personally overall, yeah, I would love to see a decentralized marketplace that has as much volume as OpenSea or Blur. I mean, that being said, we are obviously would love to, we usually it just makes sense for us to engage on platforms that have a lot more volume. But like as we've seen the past months with like all the shady businesses, centralized businesses going down. I think obviously decentralization is like the future. It might take a while, but I think it's and hopefully marketplaces are also headed in the right direction when it comes to that. Um, it seems like you have a definitely have a better knowledge of like some of the new players are out there. If there are any folks in the space that also would rather recommend decentralized marketplaces that are doing a lot of volume or have a lot of potential, please reach out to us. We'd love to like check them out.
Yeah.
But and I think I missed one of your questions. Did I?
I don't remember,
Yeah.
which is okay.
But these, yeah, I mean, like decentralization would be lovely. Yeah, that would be more fun.
Okay, very interesting. What would be Ben's or Spiciest ideal marketplace? Like, what do you look for? Um,
Uh, Honestly, just a great API and great API keys. I think
Interesting.
we're
Which
still
Blur
limited.
doesn't have yet, right? As far as I know.
Yeah, I think, and even with those marketplaces that we have more sort of development help with, we're still limited by like yeah the number of like the number of limits that we have on each key.
For DeFi protocol, typically they don't necessarily have API keys if it's
Right.
completely on chain.
Yeah.
Typically, they have like an SDK or whatnot. Like if someone is out there that's listening to this that wants to build the next decentralized finance NFT marketplace, whether it is a order book model or a AMM model or whatever the next thing is, like how do they build it so that market makers like yourself and liquidity providers can easily integrate?
Um, mm, I think assuming these, it's a decentralized platform where everything is public. I think providing an order book could be a useful thing, or it could be an edge. Or giving folks who have the access to SDK, like having access to, all the transactions that happen on the platform, would be like a great way to attract more professional traders. That's something we need to build internally, just scanning the blockchain and scanning like what transactions happen on the marketplace. But if that's like given to us, I think it's like a one easy way to entice us, or incentivize us to onboard to your marketplace platform. Um, yeah, first thing that came to my mind.
Yeah.
So if you're listening, please build feature when, but yeah.
Yeah. I was chatting with a friend not that long ago, and I think like our consensus, and I have a good friend that's an advisor for NFT Perp. His name is Ben Roy. I was actually on our podcast not that long ago. He has an NFT collection called Good Minds, and I believe Ben has put out probably 5 to 6 different threads at different time and throughout the past like 6 months about how just OpenSea does not verify their collection, and then how they don't really focus on. I think there are not a lot of marketplaces that focus specifically for creators and community, perhaps like holders of the collection. Like a lot of them is focused on let's try volume, let's try this and that, and focus on business only. I think there's not a lot of collections that marketplaces that focus on perhaps catering towards LPs or catering towards creators and collectors or holders of a collection. I think it's obviously a total different topic, and we can
Yeah.
talk about that later on. But before we hop on to the next topics, like I want to know, you guys also have instant liquidity you guys are providing in some cases, and you
Yeah.
guys focus on consultancy. Can you kind of cover that part of the business for us as well? Just getting to know you guys.
Sure. So instant liquidity, there's sort of two main ways we do that. One is if your wallet is connected to our website, or our web app, and you have the NFT, you check the NFT price, and you like the NFT price, we will buy it instantly from you at that price. So if you're holding ape123, you see the price 20 ETH on our website, and you think, oh, this I could sell this for 20 ETH right now. You can with our platform. You could do it instantly, and we'll provide you. Basically, we're putting liquidity on our prices. So our prices are backed with real ETH. So if you want to buy it at that price, you can. The other sort of way we provide instant liquidity is for our partners. A lot of our NFT-Fi partners are in like the lending and lending space, and they need liquidity backdrop for some of the positions that they have if they're close to being liquidated. And so we give them a quote based on what we think is a fair quote for this NFT to be liquidated by us. And that's like the other sort of main way we provide liquidity to our partners, or just
Oh,
how we provide liquidity overall.
for lenders, you mean?
Yeah, yeah,
Oh, that's quite interesting.
yeah.
Are you guys currently integrated with any lending and borrowing protocols?
Uh, like, what do you mean by integrated? Like, do
Like
we?
do you do appraisal for any lending and borrowing protocols?
I believe there are some who at least have access to our APIs.
Okay.
And they use. we call it the RFCAN point. They sometimes use it for particular positions that they want a quote from. Um, yeah.
Yeah, that's interesting. I mean, like, what you're saying is you're appraising NFT, and someone can request it, and if they basically like, but are you appraising these NFTs at like a fair value, or is it like at a discount from what a market price would be? Because what I'm getting at is like our first guest on Look at My JPEG was Abacus. And
Mhm.
Abacus is this
Oh yeah.
centralized appraisal model where most of the appraisal is liquidity backed. So when
Yeah.
you mentioned that the valuation you guys are appraising on these bids when someone connected a wallet on your web app, those are liquidity backed. It kind of reminded me of that. So I wanted
Yeah.
to, yeah, what are your thoughts on those? Because Abacus's big value proposition was that they could integrate with lending and borrowing protocols, so those valuations are liquidity backed.
Yep. We actually worked together a bit back early in like early summer or like I forget, or maybe late summer last year, where they initially thought we were competitors because we were both in their pricing space. But based on their value proposition, they knew they could work with us because in a lot of things we aligned well. Yeah, and you pointed out correctly, like liquidity backed appraisals. Um, and I think overall, like it makes sense simply because like if you're providing the prices, which inherently helps with liquidity, might as well take a step further and actually provide the liquidity based on the price that you provide.
Mm.
Because that was what like our thinking was when it came to like providing instant liquidity based on the prices that we have. I think it's also a great way to make a pricing oracle stand out. I think simply because I think a lot of pricing oracles can get away with pricing a lot of things, but for those who are reliant on pricing oracles, it's a bit more scary, right? Because they're basically hedging risk based on the prices being quoted, and for us, it's like our way of backing the price that we give. So
Yeah,
hey, like trust us because we will also provide liquidity based on the price that we quote. Is like is the take. Um, but overall, like a basket solution, I think a liquidity backed pricing goal is a really interesting solution. I think it also helps with their liquidity in the ecosystem that they're building. With I forget the name off the top of my head, but I think basket is like a part of a bigger. Oh no, I'm thinking about someone else. But yeah. Their ecosystem and their way of price oracle also makes sense too. I
yeah.
don't know what happened to them. I think it's been a while since I've heard from them
I,
overall.
I, I think they're supposed to launch soon. I don't know. I haven't followed up with them for a while.
Yeah.
Yeah. Yeah, that's interesting. I mean, like, okay, so let's talk about the business side of things. Spiciest is not you guys are a more of a SaaS business almost. You don't necessarily going to have a decentralized liquidity pool, as far as I know, for people to stake in there for you to deploy your strategy.
Yeah.
How you guys think about being a project in the space, while not having to go through the route of building a DeFi protocol where you have community and you have tokens, you have a DAO. Like, speak to us a little bit about that. Like the reason why you guys chose that, more of a SaaS business route, and how do you think about yeah, just kind of give us a little bit insight on the decision making behind that.
Yeah. I think we found more interest from SaaS businesses when we first came out. I think because like the pricing oracle, it can be used both for business and for individuals. So if there's an individual trader who's more active buying and selling things, hopefully they'll use our platform more and see the value in using our platform more. But overall, and so yeah, our initial approach was like we try to track both retail flow and like business flow. But we just seem to click better with and I think that's partially because a lot of these folks came from DeFi, jumping into NFTFi, and so I think they just naturally knew the value that we brought to to them and to the space. Whereas maybe there's a bit more hurdles and like an education on our part to do to help people understand like the value that we bring to them as individuals.
Yeah.
That being said, like we're still to somewhat like actively trying to attract as many folks as possible to our business and our value. But yeah, for now, I think we are focused on SaaS simply because we seem to click better with them.
Yeah. That makes sense. I think not all companies need to be B2C or C2C in crypto, right? There's a lot of companies that do really well doing B2B. Yeah. Well, these are sort of all the questions that I have for Spicyest. Thank you for coming on and kind of, give us a little peek behind the curtains about what you guys build and what you guys are up to. For those that are listening, Ben and I hung out when we were in London not that long ago. It was a great time. So really good to have you on again and chat about all this. And how do people follow you guys? What can we expect in the next following months? Let us know all of that.
Yeah, we actually have something in plan for more B2C pipeline. So for those in the chat, please stay in tune. You can check our Twitter, basically Spicyest_NFT, or you just click on my logo there. For Q1, I think we have a lot more sort of B2C focused things coming out the way. I'll also be at NFT Paris. I don't know if you're going, but that's a plan that we have. So if any folks who are planning on attending there, please say hi or like let us know. And I think we might actually start a podcast of our own as well. So stay in tune. We'll see what we come up with.
Okay, awesome. NFT Paris sounds cool. I always like Paris. It's pretty close to with New York as well. Right? Yeah, I'm in Lisbon. Yeah.
Can you take a train to Paris or no?
I could, but it could take a while. So
really?
Plane would make more sense. Yeah.
Yeah.
Okay, Ben, thank you so much for coming on to the podcast.
Thanks for having me.
It's been a blast. For those that are listening, thank you so much for coming on and listening live, or for those that are listening to the recording. Follow Spicyest at Spicyest_NFT on Twitter, and keep an eye out for the next week's episode. We have a big one coming up, and I'll see you guys soon. Thank you.
Cheers, everyone. Bye.
Cheers. Thank you for tuning in to LookatMyJPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcast from, give us a like, a subscribe if you like the content, and we'll see you in the next episode. Cheers.